Hello, I'm David Cassidy with the weekly market summary for the week ending Friday, the 7th of August. As you can see from the accompanying chart, it is often better to ignore all of the noise you hear and read in the media, as the vast majority of global equity markets ended the week higher. The FTSE 100 rose 2.28%, while on Wall Street, the Dow Jones ended the week over 1,000 points higher, or 3.8%, and the broader S&P 500 index climbed just on 2.5%. While global equity markets were supported by a number of important global economic data releases, which came in better than expected, unfortunately, this positive news was drowned out in the media by US politics, geopolitical tensions, and the coronavirus. For example, in the US, the Republicans and the Democrats continued to play brinkmanship at the expense of hard-hit American workers and failed to agree a new US fiscal stimulus package ahead of the August recess, while Donald Trump sanctioned Hong Kong Chief Executive Carrie Lam over the crackdown in Hong Kong and signed an executive order banning the popular Chinese apps TikTok and WeChat over national security grounds. However, while it would appear that Donald Trump is further ratcheting up tensions with China, it is worth noting that this is happening not just ahead of the November presidential elections, but also ahead of this coming week's meeting between the US and China to assess the Phase 1 trade deal. And as we've said before, Donald Trump's get tough rhetoric resonates well with American voters angry about Chinese trade and the coronavirus outbreak. Additionally, despite Donald Trump's posturing, we don't believe he will want to jeopardize the trade deal, as this would harm the US economy and American farmers in particular. And given his TikTok and WeChat executive orders don't come into effect for 45 days, this looks to us to be a classic Donald Trump negotiation tactic, as it can be easily reversed. Furthermore, the US Treasury Secretary, Steven Mnuchin, recommended that as Congress had failed to reach a rescue package agreement, Donald Trump should sign an executive order to help Americans cope with the economic fallout from the coronavirus outbreak by restoring unemployment assistance, suspending payroll tax, and halting evictions. This week's positive economic data included the US ISM manufacturing survey, which came in at 54.2, up from 52.6, as factories boosted production thanks to a big increase in new orders, as the reading jumped from 56.4 to 61.5. While Friday's non-farm payroll data showed that the US employment market continued to recover despite the resurgence of coronavirus cases. US employers added 1.76 million workers to their payroll, smashing expectations of just 1.48 million, and in the process reduced the unemployment rate to 10.2%. And of particular importance to note, the job gains were broadly based, with an especially large increase in leisure and hospitality, which have been particularly hard hit by the coronavirus outbreak. Please continue to read this week's commentaries, as we've got a busy and potentially market-moving economic calendar ahead. Once again, all eyes will be on the weekly US jobless claims data due on Thursday the 13th. Other key US data releases include CPI inflation, retail sales, industrial production, and the University of Michigan Consumer Sentiment Report. Elsewhere, we have UK employment data, unemployment rate and average earnings, UK and Eurozone Q2 GDP data, UK and Eurozone industrial production, Chinese CPI and Chinese retail sales. Keep watching.